Ross, really the big story today has to be the Wesfarmers profit result.
Yeah, we'll get to Wesfarmers and employment right now. Well, as we did explain to you earlier, Wesfarmers shares tumbled just after that half-yearly profit. It fell 14% to $1.2 billion. Now, this was put down partly to COVID restraints on staff and also opening times. Wesfarmers says Bunnings, Officeworks and Kmart lost around 20% of their trading days in the last half year because of lockdowns and staff absenteeism. Supply chain problems also led to long delays and additional costs. Joining me now, Wesfarmers Chief Executive Rob Scott joins me live from Perth. Rob, many thanks for your time as always. You saw a big share market reaction. You don't control that, of course. You control the company. Do you really think, were you disappointed with this set of results you put out today to your shareholders?
Well, Ross, it's interesting. When I reflect back on the last half, we were actually quite pleased with the result. As you mentioned, it was the most significantly disrupted period for our businesses through the entire pandemic. To put it into perspective how abnormal it was for us, there were 20,000 trading days across our retail businesses where our stores were closed to customers. And on those days, we continued to serve our customers online. We continued to pay our team members, even when there was no meaningful work available, and we continued to pay our rent. If someone had have said that that was what we were facing into for the half, I would have thought it would have been a much worse result.
Okay, so Victoria and New South Wales today have lifted even more restrictions. Does that really mean that you suspect that your trading and what you're even seeing now is going to bounce back relatively quickly in this quarter year?
Well, Ross, as we said today, the January was still a pretty subdued month retail-wise because of the Omicron strain and ongoing COVID infections and that leading to lower traffic levels across shopping centres. But what we've seen through February, we've seen lower case numbers, less people in isolation. We're managing the workforce challenges a lot better. And importantly, confidence and optimism is certainly improving on the East Coast, and that is translating to better sales. So we feel that we're in very good shape as a business. We've got good inventory levels. Should also note as well that last half our industrial businesses delivered a very strong result, which helped and I guess shows some of the power of the conglomerate. But we're feeling relatively optimistic about the outlook. Now, obviously, there'll probably be further road bumps along the way with COVID, but things certainly look like they're improving on the East Coast.
Okay, on the East Coast they're improving. You've made comments about Western Australia and being locked in there as a chief executive of a business based in WA, saying it's almost impossible to do business. I notice you're there now. Why haven't you simply moved the business to the East Coast of Australia?
Well, Ross, we wanted to get through our board meetings and results today. Myself and a number of our executive team will be getting on the plane on the weekend, and we're really looking forward to catching up with our team on the East Coast. It's been pleasing since we made those earlier comments that the WA government has reduced the isolation and quarantine requirement for interstate travellers from 14 days to 7 days. But still, with that requirement, it makes it pretty difficult to travel across the country on a regular basis. So we'll head over there. I'll be there until early April. Hopefully, we'll see some relaxation on the border restrictions by then.
Okay, so you also mentioned today about the supply chain difficulties, and I have a sense that the market might have been reacting as much to that as anything else today. Just explain that and how long you expect those constraints to stay in place. And secondly, what it means to the inflationary impact of the price of goods inside your stores.
Well, Ross, you're right. Supply chain has been very challenging for many people. And I guess there's been two elements to the supply chain challenges. Firstly, the international supply chain challenges caused by the rapid shifts in demand brought about by COVID and some supply constraints in some critical areas. An obvious one is semiconductors and some technology products. Across our businesses, I feel we're managing those international supply chain challenges pretty well, albeit the costs of international shipping have gone up a lot. The more recent challenges have been domestic challenges. So this is local distribution centres, workforce availability in distribution centres, and some of the capacity constraints around last mile delivery, parcel delivery during the lockdown period. So I think we'll see more disruptions going forward, but I think we're through some of the worst of the disruptions that we saw through December and January this year.
Just a simple one on that. The inflation rate, the headline rate now 3.5%. Do you think your own internal inflation rate is higher or lower than that?
If I look across our businesses, that's probably a reasonable estimate of the overall cost increases that we are seeing. And I guess in some areas we are seeing much higher rate increases. So petrol price obviously very high. We're seeing categories such as cotton, timber, aluminium, a lot of those raw material input prices are going up in some areas double-digit rates. So this is an issue that I think is going to put some pressure on household budgets in the year ahead. Fortunately, as a country, the economy and household budgets are in relatively good shape going into it. But that is why we announced today that we will do everything we can to leverage our scale, our unique merchandising and sourcing capabilities to absorb as much of that cost as we can to minimise the impact on Australian households.
Just a very quick one because I've got to go, but given the fact you've taken over or in the process of taking over Australian Pharmaceuticals Industries, in that industry, clearly you will change it. But the name, sort of Chemist Warehouse is already taken. So what are you going to do for a name with this new business?
Well, part of the API business, there's the Priceline network of stores and franchises. We think Priceline has an enormous amount of potential. It's a very well-loved brand, and I think there's a lot of opportunity to deliver even greater choice, better service and better value throughout the Priceline network.